Hello and welcome back to StockMaven, your daily source of news and updates on the financial markets. In this video, we're going to talk about a concept in options trading known as theta. Theta, also known as time decay, is a measure of how much an option's value decreases as time passes. It is expressed as a negative number and can be thought of as the daily rate of time decay. In other words, theta measures the rate at which an option loses value over time. As an example, let's say you purchase a call option for a stock with a theta of -0.05. This means that the option's value will decrease by 5 cents per day as time passes, all other factors being equal. So, if you were to hold the option for 10 days, the value of the option would have decreased by 50 cents. Even if the price of the underlying stock remained the same. It's important to note that theta increases as an option approaches its expiration date. This means that the time decay of an option accelerates as it gets closer to expiration. This is why many options traders prefer to buy options with expiration dates further out in time, as they are less impacted by theta. However, theta is just one of the factors that affect an option's value. Other factors include the price of the underlying asset, the volatility of the asset, and the level of interest rates. Understanding how these factors interact is key to successful options trading. It's important to remember that theta is not a linear measure. It varies over time and can be affected by changes in the other factors we just mentioned. For example, if the volatility of the underlying asset increases, theta may also increase. So, how can you use theta to your advantage in options trading? One strategy is to sell options with high theta values. This allows you to benefit from the time decay of the option while limiting your risk. Of course, this strategy requires a deep understanding of options trading and should only be attempted by experienced traders. Theta can be influenced by a variety of factors, including the option's strike price, volatility, and the level of interest rates in the economy. In general, options that are further out of the money, or have strike prices that are further away from the current price of the underlying asset, will have higher thetas. This is because these options are less likely to be exercised and have a higher likelihood of expiring worthless. Similarly, options that are more volatile will typically have higher thetas, as the potential for large price movements in the underlying asset can have a significant impact on the option's time value. Finally, options that are traded in an environment of higher interest rates will typically have higher thetas, as the cost of carrying the option increases with higher interest rates. One important consideration when trading options is that theta is a double-edged sword. While time decay can erode the value of an option over time, it can also work in the trader's favor if they are on the selling side of the trade. This is because the seller of an option receives the premium upfront. And as time passes, the value of the option decreases, increasing the likelihood that the option will expire worthless and the seller will keep the premium. Overall, theta is an important factor to consider when trading options. Understanding how it works and how it can impact the value of an option over time is key to making informed trading decisions and managing risk effectively. In practical terms, theta in options can help traders to evaluate the rate at which the option is likely to lose value over time. When an option is first purchased, it will generally have a higher value than it would if it were close to its expiration date. This is because it has more time to increase in value or go in the money. However, as the expiration date approaches, the option's value will begin to decrease as there is less time for it to move in a favorable direction. Traders can use theta to make informed decisions about the options they choose to trade. For example, if a trader is considering purchasing an option with a short expiration date, they should be aware that theta will have a greater impact on the option's value over time. On the other hand, an option with a longer expiration date will have a smaller theta, meaning that time decay will have less of an impact on the option's value. Theta is an important consideration for options traders because it can have a significant impact on the profitability of an options strategy. For example, if you are a buyer of options, you want to be aware of the potential for time decay to erode the value of your option. If you are a seller of options, you can benefit from time decay by collecting premiums from buyers of options. It's worth noting that theta is not constant and can change over time. As an option gets closer to its expiration date, the rate of time decay may accelerate. This means that options traders need to be aware of the time remaining on an option and adjust their strategies accordingly. Overall, theta is an important concept for options traders to understand, as it can have a significant impact on the profitability of their options strategies. By monitoring theta and adjusting their strategies accordingly, traders can potentially improve their chances of success in the options market. That's all for this video. Thanks for watching. Don't forget to like and subscribe to our channel for more daily updates on the financial markets.